Good afternoon to you, Jackson.
Where this afternoon we expect that the two remaining bills which are meant to operationalize the Islamic banking will be approved by Parliament this afternoon, and therefore closing the entire business to do with this activity of operationalizing Islamic banking. Of course, it will be noted that on Tuesday, 4 bills out of the 6 that had been presented by the Treasury were passed by Parliament. That is to do with the Financial Institutions Amendment Bill, excise duty, value-added tax, and the stamp duty tax. Those were passed, leaving out the Income Amendment Bill and the Foreign Exchange Amendment Bill. And those 2 bills are the ones that the committee, until this morning, were scrutinizing. Of course, they met with the officials from the Bank of Uganda once again, as well as the officials from the Ministry of Finance, who were led by the State Minister for General Duties, Henry Musasizi. And the issues, like you told our viewers, the contention is on the use of interest. That is when it comes to the Income Amendment Bill. There is a word, according to the Islam or Sharia laws, they are not supposed to engage in any activity that requires payment of interest. And in this bill, a word interest is being maintained, and of course it is being defined. And the members from the Finance Ministry were arguing that much as that word is there, it does not impact on the entire objectivity of the bill because it has been defined on how it will be used. However, some members of Parliament, like the Butambala County Member of Parliament, Mwanga Chivumbi, argue that the whole word needs to be deleted from the bill. And therefore, we shall be waiting to hear how the recommendation of the committee to Parliament and what decision the Parliament will take in regard to that particular idea. But what we know, today this bill must be passed because the aim is to ensure that these amendments are passed all together for assent by the President, so that the Islamic banking is kick-started in the next financial year. In regard to the Foreign Exchange Amendment Bill, we understand the paid-up capital is going to increase from 20 million shillings to 50 million shillings, as well as to 200 million shillings, a capital that an institution or engaged in foreign exchange will be required to have. Of course, when we engaged with the chairperson of the committee last week, that is Amos Kankunda, he told us that the reason for this is for the protection of the clients. So that's what we expect in Parliament this afternoon, as the Speaker of Parliament, Anita Among, is expected to chair the session.
Well,